Hey folks, it's Carl here, your local RE/MAX GoldFella, and we're back once again with June's monthly market report. Sales were up last month compared to June of last year, but this year's March market set the bar pretty high and some pockets are still struggling to keep up with the demand. Looking at the GTA as a whole, realtors reported more than 11,000 sales last month, with the condo apartment segment leading the charge in year-over-year sales growth as the urban exodus starts to balance itself out the other way. According to TREB president Kevin Krieger, these market conditions are offering temporary relief to buyers with the resumption of immigration only a couple of months away. While policymakers are focused on artificially curbing demand, the only true counter for a perpetual requirement of living space is to increase the supply of housing. And I hope everyone heard that. If you're in the market to buy, as opposed to the competitive bidding situations that we're used to, the current conditions offer a little bit of relief before the immigration engine turns back to life. In the last 12 months, sales grew much faster than new listings. This results in tighter market conditions as buyers are pitted against each other, and that results in strong price growth. However, as buyers feel the fatigue from overheated expectations, the average sale price has edged slightly lower in June, hovering just under the $1.1 million mark. Remember, this doesn't necessarily mean that the average home around the GTA has dropped in value. It just means that the average price of homes that buyers have purchased in the last 30 days has a $20,000 lower average than the 30 days before that. The ultimate indicator of value, which aggregates the actual characteristics of a home, known as the MLS Home Price Index, was up almost 20% year over year. This means that the average value of a home around the GTA has unilaterally risen 20% since June of last year. Every single person who owned a $500,000 home in June of last year has gained $100,000 in equity over the last 12 months. Anybody holding $1 million home has gained $200,000 in the same year. That's right, in the GTA, your home earns more than you do, with the average salary still just under $80,000. While the primary drivers of price growth remains in the low-rise, low-density market segments away from the city centers, it's important to note that the price of an average condominium apartment is up more than 8% compared to this time last year. And that's despite the drop in value that the segment underwent due to the decrease in leasing activity and the urban exodus caused by the pandemic-induced lockdowns. Including the 5 to 7% decline in some sectors, we're looking at a much greater than 10% increase from the bottom of the trough to the peak where we are at now. And as we move forward through the summer months into the fall, we can only expect it to grow more. Now, it's a pretty exciting time to be involved in real estate, with opportunities arising weekly as market conditions shift, new variants are announced, financial institutions alter their policies, and well, businesses are kicking back into gear. But at the end of it all, there remains a scarcity of space, for which one day we're all going to require our own. You feel like it's the right time to start thinking about your space? In fact, as soon as the idea crosses your mind, reach out and let's put a game plan together. Your optimal strategy truly depends on your personal objectives, goals, and your capabilities. With the infinite number of unique opportunities that the business implies, you can be sure that with the right method, we can find the right place for you to plant your seeds. Thanks for listening, folks. Don't forget to drop a like and ask any questions you have in the comments section below.